All right. Hi, everyone. The topic today, the title is called Avoiding Mental Whiplash. And really, it's about how do you manage conflicting advice. So as a startup founder or just any professional in your career, the key to your success is growing your network and then hopefully be able to get the most from your network. And that's a lot of what today's talk is about. Here's my sort of bio slide. I'm actually not going to go through it, but you can see a little bit here. It's just a little bit about kind of what my role is now, what I've done before, and we'll actually come back to it. So really the premise here is founders, you get a lot of advice. And then here's some examples of advice you get from various folks as you're building your company. Of course, you're told that you need to build a network, and that's important if you're going to meet mentors or investors. The programs here at Swartz Center and other programs, really help you expand the network and help introduce you to these advisors. And so, of course, the network is very valuable, but if you are talking to a lot of folks, you start getting a lot of opinions. Everyone, of course, has their own opinion. And then at times the advice starts, sounding contradictory, or one person will tell you this, and then the next person will tell you something else. And you're like, gosh, how do I reconcile this? And so this is actually known as mental whiplash. So that's a term that many accelerators have coined, especially if you go through those accelerators. Sometimes you're meeting, 50, 60, 100 people during the course of the program. So some examples of this conflicting advice. So as a founder, you're told, hey, you need a big market and a big vision. But then you might have a presentation with an investor where then they say, well, you need to focus on a niche and execute. Or that, okay, you need that initial beachhead market, and then similarly, that's too small market. So basically, both sides of the same equation here. You need to do things that don't scale. That's very famous sort of Y Combinator advice. But then inevitably in a lot of meetings, you're going to say, how do you scale the company? How are you going to scale? Often you're told, hey, you need a strong advisory board. That's critical, highlight that. And others will say, you know what? The advisors aren't as important, that focus on your core team. These are all things that I've seen founders over the years sort of wrestle with, and they come to me and say, how do I make sense of this? IP, how important IP is, you've got to lock it down. Or others are like, patents aren't that valuable, there's other moats, other barriers to entry. So any other examples people want to throw out that, sort of conflicting advice you've gotten? But anyway, think about that. We'll come back to, these examples as well. So really, and this is the premise of the first half of the talk, if there's one word to sort of take away, and it's actually ironic because I've done this pitch before, and the word is context. And of course, we just had our CSL forum a few weeks ago, and context was also a key word that was being discussed in the context of AI and LLMs, and kind of having a context layer was going to be the key to getting even better information through AI. But in this case, context is important, and let me kind of go through that. So, back to that seemingly conflicting advice, right? It's right. And so the important thing for you as a founder, or again, even if not a founder, just as kind of someone building your career, is how you qualify that advice and how you interpret it. And so, when you're talking to someone and you're getting advice, you have to think about these things in terms of the advice, right? The person itself, who's giving you that advice? So the advisor, what's their assumptions or conditions behind their advice? Sometimes they'll tell you and sometimes they won't. And so we'll talk more about that. And then your current context or your current situation. All these things play a factor in how you sort of receive and interpret feedback. And then sort of along the lines with context, some dimensions to consider that are relevant for your company, right? Kind of the sector you're in, the market conditions, and the stage of your companies. There's probably other things, but those are three I wanted to focus on. So if I kind of go in the sector, so that's for your company, right? It's just what type of business are you, and thinking about the different dimensions in your business that might drive differences. So, for example, industry, what sector, are you a healthcare company? Are you in financial services, manufacturing? Or technology. And of course, these two sometimes combine. We'll talk about fintech companies, which is going after financial, and robotics companies, which goes after many verticals. But, obviously technology is another sector. The business model, for your company, you have different business models. Again, that's probably driven by the two factors above, but whether you're a recurring software as a service model, or it's physical product sales, or if it's e-commerce transaction revenues, those all have effects as well on differentiating your business model. And then, even, diving deeper, there may be other sort of distinctions to your business, whether, regulatory pathway, how you acquire customers. So I think, one thing to just remember is that for founders, your companies are, differentiated based off these dimensions in sector. The next one is market conditions. And this is one that is very important and that I think sometimes gets overlooked. So time and location can also drive these differences. And so what do I mean by that? The time frame, the macro environment you're in. And so again, this often has to do with funding, the late 1990s, leading up to 2000, 2008, with the financial crisis, 2021, today. And so really, I think the funding environment, right, just overall from a venture capital standpoint, if it's bullish or bearish. And so really, it's and then also for your sector. So right now, I think certain types of AI companies, especially their infrastructure over the last 2 years, have been able to get a lot of funding, or physical AI. Other startups that maybe aren't in those sectors that investors are focused on are finding it to be a very bearish environment. 2021, for example, the reason I highlight 2021 was that there was a sort of a major correction in the funding markets and valuations. So companies that maybe had raised hundreds of millions of dollars at unicorn-like valuations before 2021, then found that their valuations probably would be adjusted downward. And so those companies, even if they had raised hundreds of millions, have maybe cut back a little bit on their staffing, and they had to sort of reorient their plan for a different funding environment. And then geography, I think the geography that you're operating in, the amount of capital in the market, the type of sectors that investors in your market invest in, all of those also have factors. So again, if you're thinking about it, if you're talking with someone who's investing in SaaS in the Bay Area versus maybe someone here who's investing in robotics in Pittsburgh, they may have different perspectives. And then stage, and I sort of alluded to this as well, right? The stage of your company is really another big driver of differences. Really, as you grow, kind of what's needed at each stage is different. So therefore, sometimes the advice you're going to get, sounds different. I think customer acquisition. Earlier there was the example about do things that don't scale. So that is really important at the earliest stages when you're really just trying to get customer validation. You're trying to prove that you found a problem that someone cares about, and that you've got a solution that can solve it. So at that point, you're just wanting to prove out that the basic premise of what you're doing is viable, and you're not as focused on, okay, is this a repeatable process? How do I scale this? Now, once you kind of get past that stage, you need to start showing how you have a more repeatable process. I think it's kind of related to that, from a sales standpoint, again, in the earlier stages, investors typically want to see the founders doing the sales. They don't want to see the founding team outsourcing sales or trying to hire in sales too early because they believe that the founders can best understand the problem, their solution, and they can iterate quickly on how to sell. And then once they kind of feel like they have the formula, then you bring in the professional sales, the VP of sales to scale that. I think same thing with development, outsourcing versus in-house development, different stages, and really even what type of technologies you're working on. If you're working on core technology, that's going to be really differentiating for your company. You probably need to keep that in-house and have the expertise. But then as you are kind of growing and, some of the development needs you have, whether it's outsourced and now, probably even with AI systems. So really back to kind of, what I said earlier, if you are getting advice, think about evaluate the advice. So this goes back to qualifying, for you to qualify the advice you're given. So then it's back to the advisor, understanding what the assumptions, are behind their advice in your situation. So, okay, let's go back to this slide. This was me. So pretending like you're having a networking meeting with me or, I got introduced to you as a potential mentor. So, all right, so this is my, slide with lots of things about my background. So let's analyze it a little bit more. And this is something you should think about if, if you're meeting some folks. All right, so let's just pretend that you're working on a healthcare related startup. So let's just kind of make that up and you got introduced to me. So you start looking at my background, my LinkedIn profile, you can see, okay, well, I did work on the Alpha Lab Health Accelerator. I've got some software background. A couple of the companies that I list that I've worked with, you would say are in that healthcare, life sciences realm. And, so that's one way to start thinking, okay, what's the context? What's my background in sector? Market condition. So some of this is timing, again, not all advice, sometimes advice ages well, sometimes it doesn't. And so, you have to think about like, okay, the context. So with Alpha Lab Health, so kind of helped launch that in 2020. So that's a little bit more recent. Sort of my investment in Pittsburgh was 2002 to 2023. And that's also important because, and I always say this to entrepreneurs when I meet with them, saying, I haven't, been focused on I haven't done an active investment in the last 2 to 3 years. So my advice is either going to be based off my experiences before 2023 or more just generalized. But again, you always have to then try to think about it in the current market conditions. And then also some experience, kind of working in the Silicon Valley area, kind of more on the operating side, but not necessarily from the investment side. And then similarly, stage. Okay, what stage, am I familiar with? Okay, I do run corporate startup lab now, so I have more familiarity with corporates. But if you look at the other things, or accelerator, pre-seed stage, what you don't see is like, growth stage or Series C, Series D. So those are all things that sort of just kind of keep in mind, because it's sort of when you talk about when someone says, take my advice with a grain of salt or keep these things in mind, those are things that you can be thinking about. So, I think sort of, for the advice, further diving deeper, try to understand the rationale for the advice. Don't just kind of have someone say, you must do this. I don't know. You must hire a VP of sales as soon as you can. Okay, what's the rationale? And, kind of understand why they're suggesting that. Even better, right, is like understand, when they say that, what assumptions are they making? Sometimes they are thinking a year ahead. They're giving you advice like, hey, you know what? The inflection point for my company was when I brought in a VP of sales. But if you ask them a little bit more, it's like, when did you do that? Kind of what conditions in your company did that make sense? Then, you're one asking a qualifying question and figuring out if it applies to you. Then they may go, yeah, you're right. That was when we raised our Series A round and we had 10 customers and $1 million revenues. Okay, you're not quite there yet, but keep that in mind for when you get there. So those are ways you can have those sort of conversations to get to, really just clarifying what their assumptions are. If it was based on experience, kind of what was the context. And then again, it's back to these things we talked about, right? Kind of what the company that they were at, did, to the extent that you can understand the industry business model, conditions and state. Now, again, these are things that if you have 20 minutes for coffee or a 30-minute meeting, you don't want to waste all your time like really diving in. But again, sometimes asking one or two clarifying questions just so you better understand those underlying assumptions, especially if it's feedback where you're feels a little bit conflicting to you. It's like, gosh, that doesn't seem what I would have expected, or this isn't something I've heard from others. That's a good opportunity to also try to clarify better. So anyway, if we just kind of go back to the examples on this slide, I think, we probably talked about this. The first two about the big market or the niche, that I do another talk where I talk about what investors are looking for. And, this is one of those, how sometimes you say, this can be true and this can be true. And I think this is an example that the investors want to see that big market and vision, that ultimately to make an investment decision, they have to believe that your company has that potential for growth to eventually exit, at $1 billion, $1 billion plus. But to get there, they need to feel like you know how to execute at a micro scale, that you know how to start, with focus, that you can focus, execute, and you have the vision to grow it. And so that's a fine line, because sometimes a pitch becomes just all hand waving and, big market ideas, or sometimes it's just tunnel vision on the execution and plan with no vision. So you really do have to have both elements to it. And I think, really that kind of relates to the other things about scaling the company, both, knowing what stage you're at right now and what you need to do, but ultimately, kind of what your assumptions are for how you're going to grow the company. And then I think the last couple of things about advisory board or IP is probably more sector specific. I think if you were doing a life sciences company, then having a strong scientific advisory board is really critical, I think, to your credibility and success with investors. Maybe if you're doing a SaaS company at the early stages, less so, because they're going to focus more on your industry backgrounds. So those are a couple of things. And similarly with IP, again, life sciences company, or if you're doing an infrastructure play around AI or robotics, I think the IP and your patent portfolio is pretty important. But again, if you're doing software as a service, the patents may not be as valuable. So anyway, that's sort of the first half, which was more just about sort of interpreting advice and managing the, seemingly conflicting advice. Any questions, Alice?
If I'm good enough at distinguishing good advice from bad advice in my circumstances, it sounds like I don't need advice at all, because I can kind of do the backwards reasoning from this advice and came up with the same conclusion.
That's interesting. I haven't thought about it. I mean, yes. I mean, ultimately the key is for you to get good at discerning, but then the advice you're getting is just additional data inputs that you're getting. So yeah, whether you consider that advice or just kind of data inputs, but yeah, so I think a lot of it is because I've also seen that, right, with your company, you're still the biggest expert of your company. So therefore, again, I think it's good to be informed from different perspectives. But again, just, maybe one takeaway is just don't blindly, kind of follow advice if you don't understand, these assumptions.
Do you think it's sometimes best to just not ask? If you can't really get a full set of circumstances, this particular person just leave it as a blank entity?
I mean, I feel like, look, if you've already committed the time to meet with this person and they've committed time to meet with you, try to get the most out of it. So I think asking, engaging conversations, asking, is still valuable, because you just don't know what you might get that could be valuable. But I think sometimes, it's maybe how you plan for the meeting, or asking someone who doesn't really have don't ask a question of someone if their background and perspective wouldn't really be a credible answer, for that. So again, play to their strengths as well. Think about what it is about their background situation where their insights or their experiences might be, most applicable to you. So, okay. The next part is sort of some stuff I put together that's more tactical as well about just, managing the relationship. So, kind of go through these quickly. Email updates. I know when we ran our accelerators, we always suggested engaging mentors through email updates because that was, there was a lot of things that was good about it. One, it gave you a regular cadence of engaging with them. And two, it was honestly for you more scalable. If you've met 20, 40 mentors, especially in a program, now, a very well put together email update to all of them, still, is connecting with them, you're communicating with them, and there's ways you could ask for things as well. And then in terms of, what the email update might look like, update on the company, KPIs, key metrics, sometimes recognizing or thanking mentors that have helped you, asks for the group, I'm looking for help in this area. And I think you can apply these principles to you as an individual as well. If you think about your career, or you're ultimately developing a group of mentors who have probably made introductions for you to other folks or have helped you with your job search, things like that, sort of find, either sending them, I think in those cases, because it's a smaller number and it's, a longer time horizon, even if it's, individual emails, even if it's more of a cut and paste with some personalization, I think that's an effective technique. It's sort of along the lines of, right, kind of just engaging and staying in touch, then, makes those asks seem less transactional because you've been nurturing the relationship. I was actually listening in on a live session at an event going on at the convention center today about Discovery Day for Pittsburgh Robotics Network. And they were having a panel. It looked like the discussion was around sort of career advice and networking. And that was really kind of takeaway from the panel as well. Just talking about, building those relationships so that, your next interaction isn't necessarily the ask for something. And then there's lots of blog posts, content out there about email updates. I've included one in here that actually kind of goes through, what a sample update email might look like. So I no need to sort of recreate the wheel on that. I think second thing, when you're asking for feedback, right, it's, giving them something tangible, right? As opposed, it's the open-ended asks are hard. When someone says, all right, what should I do? Or what should my go-to-market strategy look like? I mean, inevitably, if you ask me that, I would probably still ask you several questions to better understand your context before trying to give you an answer. But I think, if you kind of say, hey, here's my current metrics on lead gen or by source or channel, or, and then if you had some questions in mind, should I be spending more on paid or organic? What channels should I look at for investment? Of course, this developed this presentation about a year ago. I think some of the acquisition channel stuff now is going to be even more AI centric. How do these compare to others that you've seen at a company for our stage? Or if you've got a deck or a plan, first drafts. So again, giving folks something to react to is probably the best way. Hey, here's my outline or my first draft for my investor pitch deck. Is the right level of information there? Is this compelling? Is this unique? I think another way is, especially if you have multiple folks that you sort of seek for advice, is arranging a meeting and bringing them together. Now, this often works if you've got an advisory board or an informal advisory board. So I think there's a lot of benefit, right? One, it's, you have one meeting, you get multiple people together, everyone hears the same context, and they can hopefully listen to each other and feed off each other. I think the things to be careful about, to think about whether this is the best technique, is just simply is everyone in here already at the sort of same level of knowledge about your situation, your company, or are you going to have to, spend time educating this side of the room while this side of the room is like, okay, this is a waste of my time because I already know all this stuff. So that's always one thing you have to think about is how much info they already come in with, or whether their areas of expertise are such where them sort of interacting with each other and feeding off each other is a good thing. Or if they're highly specialized with their niches, you might be better off having individual meetings. So I think now often with startups, I think getting feedback on investor pitch decks, would be valuable. So I know that many of you know Dave Mawhinney, so like when he was mentoring at Alpha Lab, often startups that we were working with, we try to get Dave, Ed Engler, a few other folks all together. So having 3 or 4 of us listening to the same pitch deck and then reacting afterwards, having this kind of, I really like that. And someone's going, no, I didn't like that. And then we would actually sometimes try to reconcile why we had different views on it. And hopefully that helped the founder, kind of understand why there was a difference of opinion. But again, other watch outs is in a group, dominant voice. So that, you have to know the dynamics, if one person is going to dominate a conversation, that's you would have been better off just meeting with them one-on-one. And then I think, having a specific issue is probably a good thing. And then I think we're almost done here. Just these are sort of obvious things, valuing and respecting their time, so make sure you're not taking advantage of the relationship. And you have to be careful with urgency because for you, everything is urgent, but you have to differentiate, if you do end up on a relationship basis where you have the cell phone number of a key mentor advisor, don't be texting them on Saturday night at 8 p.m. with, I don't know, a non-urgent question just because it's on your mind, so think about that. And believe me, that's a real life example that we've experienced. But if you're negotiating right now with your investors to try to get an acquisition approved and, the acquirer wants a deadline by Monday, then yeah, texting on Saturday night, like, this is urgent, do you have some time? That's absolutely appropriate. And then again, back to the updates, right? The natural cadence also helps with these sort of urgent requests because you've already given them some context and it doesn't feel as abrupt. And then of course, follow up, think about who gave you advice, who helped you, especially on a issue, and then maybe follow up with them and let them know how it turned out, things like that. So, okay, last thoughts here was, this is just summarizing that I think a good mentor advisor, they should almost automatically give you the qualifiers with their advice. So that's also another thing to think about. Sometimes the good mentors are the ones who don't seem as confident in their opinions because they know that it has a different range of applicability, so they qualify everything. I've actually sometimes told founders to be a little wary of the people who are way too confident and way too certain with their advice that it automatically applies to you, because those are the ones that sometimes I found aren't always the best feedback. Ask the qualifying questions. Be careful of absolutes. That's kind of what I was just referring to. You must do this, and especially if you ask them why, if they don't have a great answer for that, just kind of keep that in mind. Obviously apply it to your situation. And then really just, this is party thought, right? It's your company or it's your career. So you should know your context, better than, the person you're meeting with. So always keep that in mind. So that was kind of what I had. Any additional questions? Nothing? Oh, yes.
It's kind of like less from the startup level, but kind of more on individual, like networking level. Sometimes there might be somebody that you probably touch base with like really early on in your career, and then you kind of want to rehash that, like warm up that network again. How would you go about that, even if you haven't spoken for maybe like a year, half a year? So
yeah, I think so. The question for those online was, sometimes there's someone you've met earlier in your career, and maybe it's sometimes gone by. You used the example 6 months, a year, but sometimes it could be 10 years, right? And how do you warm that relationship back up? I think this is where, there are times where, really the situation that brings you to reach out to them is pretty specific and you are asking for something. And I think that's fine, but even then, right, take the time in that email or reach out to update them a little bit and then, give them a little bit more, reason. Don't just kind of say, hey, it's me, remember me from wherever. Hey, I was wondering if you could help me with this. That feels a little bit cold, but, if it's one, or in other cases, ideally, right, it's just, if there's a unique situation that's kind of brought you all together, like, I don't know, hey, you've moved to Pittsburgh, I see now on LinkedIn you're also in Pittsburgh, would love to catch up. Those are also other ways to the extent that you're able to have some interactions, just to more warm up the relationship and bring them back to your network. That's the ideal. But
Maybe any ideas on how to manage relationship with super busy, like high-ranking people?
So the question, how to manage relationship with super busy, high level folks? At what point? Is it you already have the relationship or you're trying to sort of build a relationship?
Already have, but it's like long-term relationship with the person, it's like CFO of the 30,000 people.
Yeah. I think a lot of it obviously depends on how you know them to begin with, sort of that original context. But I feel like that's where, um, the occasional touch base, keeping them updated, especially if there's something new, like, kind of in your career. That's, of course, if you switch jobs, if you move, or you've gone back to school, I think those are, those are good. And then I think it's going to depend on person. In some cases, they may say, hey, that's great. They won't respond, but they noted in other cases, they'll say, oh, it's great to hear from you. Thanks for staying in touch. So I think it's, and some of it, right, is just, really just kind of keeping in touch. But then think about ways that you could be helpful to them. So therefore, now, again, maybe it's because of what you're, an event about or article you read, things that if you think might be relevant for them. So it shows that you're also trying to think about how, something that you're involved with might have some relevance. So. And then, of course, think about it from what's unique. What's a unique perspective that you could bring? So therefore, obviously, something happening in Pittsburgh here at CMU, or if there was a conference here that you really think would be valuable for them, things like that. So.